Hello, everybody. We're going to be talking real quick about final expenses life insurance policy. Final expense life insurance policy are mostly structured to pay for the burial expenses at the time of the passing. This allows for the grieving timeline of your family only to concentrate on what really it is, the changes they had just had overnight of you no longer being there with them. Okay? One thing you don't sure want to leave behind is going to be their debts, and you don't want to give them with the burden of how they're going to be paying for that funeral. This is all has to be talked about and be part of your financial foundation planning. Once the life insurance are in place, it will cover a lot of different things depending on your family structure and what are you needing financial assets to be secure within the if somebody from the family is no longer with them. Now, what when does this policy really comes into effect? This type of policy, I see that a lot on clients who are already over age, the 60, 65 years old of age. They no longer have a life insurance policy because either they had it through their employer or they used to have a term policy and they expired. That term policy has expired on them and they no longer have a coverage on it. So the bad thing about this type of policy, you're gonna have a higher premium and a lower coverage. Remember, why is that? Because life insurance premiums are always going to be considered on the age of the client and the health condition of the client. So the older you are and the more health issue you are, most likely you're going to have a higher premium or you not might even qualify for a life insurance policy. You got to remember, not everybody does qualify for life insurance. So that's very important. The younger you get this in place in your family foundation, the cheaper it's going to be for the long run, and you make sure you're going to maximize the coverage that you're leaving behind for the family. Why do I mean by that? Because not only you have burial expenses can go anywhere between $8,000 up to $20,000 for a funeral. That's not including transportation. If you were looking at transporting somebody from state to state or country to a different country, you got the air travel, all this other stuff. It comes very costly. So you want to make sure you have that financial foundation established and set aside for it. Another thing you want to keep in consideration is going to be your estate taxes and inherited taxes. Estate taxes is mostly going to be the debts that you left behind. Yes, you're right. Once a person passes away, the debts does not go away with them. The debts are going to get paid. What's going to happen? The creditor is going to go ahead and go to the state. Hey, X amount of person passed away. They have so much money in debt. I want my money. The state's going to go ahead and go into your state assets and they're gonna go and look at all your assets that you're gonna have, and out of those state's assets, if you don't have the money to pay all those debts, the state then will go into probate court, and in probate court, the state will initiate the process of seeing how much you have in assets within within the estate, your family estate that got left behind. That's gonna be set aside to be paid off the creditors, and whatever left up is going to be left to the beneficiary after they pay the state and federal inherited taxes. Okay, keep that in mind. Why life insurance policies are very crucial to have in place. The funds that are coming from life insurance from the life insurance to the beneficiary that have passed away, that money is tax-free income. Let me explain this a little bit much better. So, person A passed away. Person A had a life insurance policy of $500,000. When person A passes, he left to person B to be the beneficiary. So once A passed away, person B went ahead and received $500,000 tax free from the life insurance company, which means the person does not pay taxes on that beneficiary money that got left behind. What you do with that $500,000? Well, now you can start paying all the debts that got left behind to make sure your properties are paid for, all the creditors are paid for, and your estate is not being probed by your estate itself, okay? By your current state that you live in. Now everything, all the assets are set in place. Now you're paying your taxes that you gotta pay from your estates if you got any, and then everything's gonna be good to go. You understand? Now let's go a different way. So how do I avoid paying those probate tax? Go to probate code, go to the federal estate taxes. Different way, different state. Give me a call. Let's sit down and talk. We see where you live at, and we can work a strategy for you to alleviate those costs a little bit down for you, or even eliminate them at all. There's different strategies out there that you'll be able to do. just depending on where you're sitting at your current state and how is your financial foundation established and set in place. Remember, the younger you get the life insurance policy, the cheaper it's going to be, the more coverage you're going to be leaving behind to your loved one. Not only that, utilize this policy to set that estate planning. And not only you setting up your estate planning, we're going to sit down and see how you can be able to set a good financial foundation for your family now and for your legacy also. It was great talking to you guys. Hope to see you guys soon. Send me a DM. Any of the pages that you see attached to this video will be able to help you out on any of the information you might have on inheritance taxes, on a final expenses, on living benefits, whole term policy, all that stuff. We'll be able to take care of you. Love you guys. Talk to you soon. Success for the best.